I'm here with Warren Redlich. This is Bradford Ferguson with rebellionaire.com. We're going to talk about Warren's rebellious journey into all-in investing and his journey, upcoming journey from the US to Japan, which is a very interesting personal finance case study. We'll also talk a little bit about Tesla and long-term perspective on Tesla. But first, I want to thank Warren for kind of like prodding me in a way toward serving all-in Tesla investors. I've been kind of opposed or reluctant to do it because do-it-yourselfers are a different breed of investor, and I'm certainly one of them too. And I was a little nervous about doing that because do-it-yourselfers are very opinionated, they're very frugal, all these kinds of things. But I learned at TeslaCon how much help Teslanaires needed and all-in Tesla people needed. So Warren, go ahead and say hello, and maybe you can react to that.
Hello. Yeah, no, I think that it's hard to do all-in investing for most people, because all investing is driven by conviction, and you have to believe in a company enough to say this is the right decision. And I think for most people, if you don't do the research and you haven't developed conviction on a company, then all investing is not the right strategy. You only go all in on something you believe in. So for me, I made a mistake by not going all in on Amazon in 2013 when I believed in Amazon.
Yeah.
And I should have at least started the path of investing a lot more in Amazon than I did. I bought Amazon stock, a one-shot purchase in 2013, and I didn't follow it up by like researching the company more and really persuading myself this is why. And a 13x, then I consider my worst investing decision because I didn't invest enough.
Yeah.
So 2015, SpaceX lands the first orbital rocket booster, and I was already following SpaceX and Tesla, but this sort of, raised my awareness. Like, I recognized how utterly impossible that had been, how game-changing it was to be able to do that level of engineering, and said, if they're doing that kind of engineering at SpaceX, they're probably doing that at Tesla. 2 or 3 months after they landed the first, I think it was 2 months after they landed the first orbital rocket booster, I started buying Tesla stock, and I never stopped. I literally I just bought 200 shares like a few weeks ago. I continue buying Tesla stock. I'm as all in as is manageable in my life. I have some cash, right, and I have some physical assets or whatever. But I have like tiny amounts of other stocks that I just haven't sold yet, or I just keep them for, like Arcimoto. I have like, I don't know, $15 in Arcimoto stock. But so I think that once you develop that conviction, if you don't have the conviction, then investing in, let's say, the S&P 500 or an S&P 500 index fund, let's say, is a pretty good move. I think in general, over the course of 20, 30 years, the S&P 500 index is going to outperform most other investments, most other standard investments, right? Putting it in a bank account, putting it in bonds. I think the S&P 500 is going to do better. But once you find a company,
or possibly real estate, you're in Florida. You just shared with me on your channel that you bought in 2011, and you doubled your money over 12 years. But the stock market has doubled, pretty sure, in the last 7 years. So it's kind of like a slower rate on the real estate side.
Yeah,
and you're in Florida.
Yes, we just sold our house, and I banked a pile of cash, and I had been thinking of buying some land and building something, but I was like, well, if I took all that money and I put it into real estate, it's money I wouldn't be able to put in Tesla stock. It's money I wouldn't be able to put into my own startup. It's money I wouldn't be able to put in other things. And I decided, you know what, that's a path I might follow down the road, because that is, in a sense, a startup idea. But yeah, I just think that I believe that my money in Tesla is more likely to return than my money in real estate, or my money in my own company, or my money in the S&P 500. And when you get to a point with a company where you see it in that way, and you've done your research, and you've really pushed yourself to listen to the negative narratives. I've listened to Gordon Johnson, the Tesla critic, and a variety of Mark Spiegel, there's a whole bunch of these people who are
Yeah.
like very critical of Tesla, saying, oh, it's a busted growth story, or, FSD is never going to work. I dived in, and I've got it. And of course, I've been driving FSD beta for a couple of years, but I started investing long before I even owned a Tesla. And when you see the change coming, once you see it, it's like, how could I invest anywhere else? That's, fundamentally the challenge is there are people who are bullish on Tesla and think Tesla's going to 5x in 10 years, or they think it's going to 10x in 10 years. I'm like, no, it's going to do much more than that. I see Tesla growing 20x, 30x, 50x. The only thing that's going to hold Tesla back is if Elon decides, hey, we don't want to make too much money. We have to make it look fair.
Yeah.
I think he might do that. But, so I'm just very bullish, and I can't see any other. I think 10x in 7 years to 2030 is extremely likely. And I can't see another stock or another investment that's going to perform anywhere close to that over the next 7 years.
Yeah.
And time horizon is really 10 years, 20 years. And same thing, I see it, until the Boring Company or Neuralink does an IPO, which are two of Elon's startups. Those are companies that I think could outperform Tesla over the long haul.
Our model for 2030, it doesn't include Robotaxi, it doesn't include Tesla bot, and we're at $1,000, so that's a 4x. But we're not even modeling in like any kind of percentage of success for those. So like when you add in those percentages, and I'm very confident about Tesla bot, being able to start delivering value. If not like by the middle of next year, then the year after that,
At least
and
in a few
delivering
years.
significant savings and profits to Tesla and allowing them to scale faster. And Robotaxi, I think, will be hot on its heels, if not already too. So we're probably low for 2030. I am a financial advisor. This is not financial advice. Rebellionaire.com is a brand of Halter Ferguson Financial. We're regulated by the SEC, and we're headquartered in Indiana.
Yep, and I'm not a financial advisor, and I'm a retired lawyer, and this is not legal advice nor financial advice. But it's just like sort of my story. Really, it's my story. When you talk about,
and I had a conversion as well too. So,
when
but
you
you
talk
go
about
ahead.
when you talk about 4x by 2030, this is where I look at the story, and let's leave out Robotaxi and let's leave out Optimus. I see a pretty straightforward path to Tesla 10xing the vehicle deliveries by 2030, maybe 2031. We can go to 2031 if people want to say, okay, they turn impossible into late. So in other words, they're going to deliver less than 2 million. They're going to produce less than 2 million vehicles this year. I think they're going to produce in the ballpark of 20 million vehicles in 2030. That's a 10x. Now you've got Tesla Energy. Tesla Energy is growing much faster than the auto business.
Right.
So I see Tesla Energy.
It may
30x, 50x by 2030.
25 to 30. Yeah.
So just on the core businesses, and I don't think people realize that energy is as big of a core business as it is. And that's something we could talk about with the what they're doing with accounting for Megapack and the latest report.
We'll come back to that. Yeah.
Yeah. I see, if you're going to 10x your automobile production and you're going to 50x your energy, which is going to make energy, let's leave out Optimus and FSD. If energy 50x's from here and auto 10x's from here, then energy is a roughly comparable size to auto. So the company has grown more than 10x. Why would the stock only grow 4x? Maybe you can answer that for me. I mean, maybe you're being conservative and saying they're not really going to get to 20 million vehicles. What's your story for how you get to 4x when I get to 10x plus?
There's a couple of risks that make us a bit nervous, which is lithium.
Okay.
The profits in lithium are actually on the mining side. It's a 90% profit margin on the mining side, whereas on the refining side is 65%. And Jordan Geeksy of Limiting Factor just figured that out. And so I'm not sure that we should just take Elon's word that the refining is a limiting factor. I'm not smarter than Elon. I have way less information than he does. So we're skeptical. We think that's a risk, and we think execution is a little bit of a risk as well on Tesla's behalf. But uh, Tesla bot could easily help with execution and help them ramp things faster.
Yeah, I think when you, so let's step
Like,
aside.
why haven't they broken ground on Mexico already?
Well, that's just, I mean, the same thing happened with Berlin, right? Berlin took longer than people. Shanghai went
Yeah,
up so fast that it set like a mold that everybody
yeah.
expected that everything would be like Shanghai. And Giga Texas went up pretty quickly.
But
But
there's no like environmentalists slowing things down in Mexico.
no, there's government bureaucrats slowing things down in
Yeah,
Mexico. But we knew that about Mexico before. It's not like we're surprised.
yeah,
I'm personally not surprised that the Mexican government isn't moving as quickly as we thought they might.
yeah.
And I think we're still seeing slowdowns in Berlin for the next factory, and that. But
And that's a risk of various geographies. Like Indian government is probably just what politicians like to do is they like to extract tolls. I don't want to get
yes,
overly into politics, but they like to create hurdles, and then you can grease the skids to go over the hurdles. And India, France. I'm not. I have no idea how the level at France, but all these different new countries, there's a new issue with it.
if you don't
Um,
want to go on a digression that's related to that, I served on my town board, the
mhm,
Guilderland town board, for about 3.5 years, and there was this project called Glassworks Village that the town supervisor is somebody that I hold in very low esteem. Okay.
mhm.
Um, and he just kept creating new hurdles for them. And he would create a committee that would review something, and then there'd be a new hurdle for them to go over. And it was like 7 years of them presenting. This was a mixed use project where you had residential and commercial together. And it was a pretty cool looking project. And I was opposed to it. Was already like halfway through the process. It should have been a much shorter process, but it was already like
Mhm.
halfway through the process. And he kept creating other hurdles for them and other hurdles for them. And we got to the final vote on the project, and I vote, or a substantial vote on the project, and I voted no, because I don't like spot zoning, and this whole concept of planned unit developments or whatever was really spot zoning.
Yeah,
And the guys behind the project were mad at me. Like, look, I didn't extract cash from you for 7 years. And it took so long that the financial crisis hit and they couldn't build the project. They couldn't get, after they got the final approval, because I was the only vote against it, right? It was 6-1.
mhm.
So I didn't stop them from getting their project. And they were mad at me. It's like, if this guy hadn't dragged you out for 7 years, I wouldn't have even been on the board
Yeah,
when this came up. They loved him, and they were mad at me. Like, he kept telling them what they wanted to hear, but we just got to do this one more thing. We just got to do this one more thing. And we're having a fundraiser for our political party. Maybe you guys could show up, and just
mhm.
extracting a little bit more money here, a little bit more money
Yeah,
there. And this is why I think like India is probably not a good idea. Like, I'm not saying it's impossible, and I think Elon has some smart people on his. I wouldn't have thought China was a good idea either, frankly. And Shanghai obviously worked out really well.
mhm.
But it's one of my fears is, Mexico is a potential problem, because you just know they're going to extract something along the way. And that India is going to create bureaucratic hurdles along the way. So I see that challenge. But anyway, I
And
just
and, and for
you,
people that don't know, India has a lot of different challenges. They're very protectionist about their industry in India, so they really penalize imports that come in. But one thing that's pretty radical with India is whenever you want to transport a good across state boundaries, you had to pay a toll.
yeah,
So you have all these different states in India, and you had to pay a toll to cross the boundaries. And I think Modi got rid of that.
right.
Um, but there's still there's some other ways in, where
Well,
they
this
can
is,
extract their tolls. But I wanna come back to Tesla.
yeah,
I would say on the positive side, the culture, how fast they're innovating, it it's not easy under the surface of Tesla. They're sometimes they actually do cut corners, and then they have to go back, or they got to correct things. But that culture of like how passionate they are, and how people grind, I think that's going to just keep propelling them in the future.
yeah,
So that, along with potential for Optimus Bot, it could allow them to scale faster than we think. So like execution may not actually be a risk. And it certainly, like, Investor Day gave me a lot more confidence about execution. There's like so many good things they're doing under the surface.
Yeah, I think Investor Day, like particularly the presentation by the logistics guys. That's
Yeah.
you would never see another company. I mean, you never seen any other company do the presentations that Tesla does, but that presentation on logistics was so outside the scope of what we're used to, and so indicative of how far ahead Tesla's thinking. When you talk about risks in the short to medium term, when Elon was on a Twitter space, the XAI Twitter space, he said
Mhm.
right now there's a shortage of silicon for AI training computers. He said that's going to ease next year, and then we're going to have a shortage of voltage transformers, which is how the grid distributes electricity, because you're going to have these
Mhm.
AI training supercomputer clusters that need all
Right.
this energy, and you've got to bring all that energy in, and you're going to need voltage transformers for that. And then a year after that, the demand for electricity, I think both from AI training supercomputer clusters and from the incredible growth of EVs, is going to start to put pressure on total electricity generation. So,
Mhm.
and what you just said, and we're talking about these logistics guys, what we've seen with Tesla is they see these problems coming sooner than others do. So
Right.
when Elon says there's going to be a voltage transformer shortage next year, I'm confident that Tesla has a plan to deal with the shortage that's coming, because we saw
Mhm.
this during the pandemic, and there were the supply chain issues, and all the other car companies reduced production and Tesla grew production. Right? Tesla is able to execute through crises because they see them ahead of time. They have a logistics team that's anticipating these crises ahead of time, and they're making plans ahead of time. Now, whether Tesla's going to make their own voltage transformers, or they've got long-term contracts with people who make voltage transformers, that Tesla's planning ahead for that, and no one else is.
Yeah.
You know that Ford and General
I
Motors
think
are
they'll
not going
need
to be
to do
ready.
something. And transformers have been in a shortage for a very long period of time. We have a client who works for a company that makes them, and there was a period of time, and I think it's still above a year wait for a transformer, where you do the design for the building, and before that design is even finalized to like the architectural spec where you got the wiring and the cooling and everything, before that's even finalized, they have to order the transformers, like,
Right,
because they're like backed up by a couple of years.
right.
And when Elon's talking about a shortage of silicon, what I think he means is creating the wafers and doing the designs on the wafers. So it's not a shortage of the silicon material or the wafers themselves. It's actually being able to process them through a chip making company like TSMC or
It's
whoever.
chip production. It's chip
Yeah.
manufacturing. The price for NVIDIA A100 and H100 GPUs is through the sky. And I think he's saying that silicon shortage becomes less of an issue once Dojo goes in. It's at least less of an issue for Tesla
Yeah.
once Dojo's in production. Once Dojo production scales, then all of a sudden, at least Tesla has this huge volume of AI training supercomputing power with Dojo, and they're still going to buy NVIDIA. But I think AMD is going to come along and produce more, and NVIDIA is probably working on producing more, and maybe there's more. So when the prices are that high, the market's going to react, and you're going to see more manufacturing of chips. So,
Yeah, Tesla's becoming more and more complex.
but
That's
I just want to deal with this rift between you and me on you see Tesla 4xing by 2030, leaving out bot and
oh,
SS.
that's like a somewhat conservative valuation because we're leaving out Tesla bot and others.
Right.
I'm almost a maximalist on where I see the auto business going longer term. Like
Yeah.
I think I haven't studied the numbers for this year, but as far as Model Y, um, I I think they're getting close to 1.5 million, but it won't quite be that. I think it'll be less, but I don't see why Model Y annual sales couldn't be like 3 to 5 million in a year. It's just such a compelling product compared to everything else. But looking at things more generally, is Tesla keeps driving down the costs, and it's like each big event they have, they're talking about driving down costs. Battery Day is about driving down costs. It's, taking down the weight, using structural pack, doing these big batteries, and the ultimate punchline is we're driving down costs. AI Day 2 is about driving down costs of like the motors and stuff in Optimus, making it so there's less strain on the joints of Optimus. So like you're reducing the long-term costs and you're making it more scalable rather than using like 32 different types of actuators and motors. You're using 6 or something like that.
Yeah.
And that, ultimately that helps cost. And then, they talked about reducing cost, with Dojo and with, self-driving. So that gives me great confidence that no company is going, this is my opinion of Halter Ferguson Financial, um, that no company is going to be able to compete with them on cost. And then
Right.
then my mind goes to, well, okay, then why is Tesla even going to be limited at 20 million cars beyond lithium? I don't think they suddenly stop at 20 million.
Yeah, I agree with that. So let me just address one thing. You said that Model Y you see going to 3 to 5 million, and I have a different take on that. And I would say the current version of Model Y, and I'm not talking about a refresh, but I think there will be a future total redesign of Model Y. I believe
Mhm,
the current version of Model Y tops out at 2 to 2.5 million. I mean, I see
mhm.
500,000 in Berlin, 500,000 in Texas,
Yeah,
maybe 500,000 in Fremont, and more than 500,000. I think between the 4 factories, it's somewhere between 2 and 2.5 million. And maybe they can squeak a little bit more out, but I think they're not gunning to increase Model Y production much beyond 2 to 2.5 million. And the reason for that is there's a new vehicle coming.
right,
The next generation vehicle, well, there's a history with Tesla. Model S was doing great. Model X came along, and Model X took some of Model S demand.
right,
And Model 3 comes along, and Model 3 takes some of Model S demand. And then
right.
Model Y comes along, and Model Y takes some of Model X demand, and it takes some of Model 3 demand. Now,
Right.
as the company grows as a whole, they are expanding demand for the whole company, but within the company, there's a little bit of pull here. And this next generation vehicle, I think, is really going to draw from Model 3 and Model Y, their demand.
Yeah.
So, and it depends on what they produce. My gut hunch is it's going to be like they said, there's 2 vehicles. So my gut hunch is something in the ballpark of the size of a Toyota Corolla and something in the ballpark of the size of a Toyota RAV4. Those are 2 of the leading vehicle platforms in the world. It makes sense to target that, just like Cybertruck is targeting the F-150, right? So that I think that's the general idea.
And
And
what Warren's kind of leaving out is that the cost is going to be much lower to the consumer, so that pulls demand. But also, there's all these people that stretch up to purchase a Tesla, where they're stretching up from a Honda Civic or a Toyota Corolla, a Toyota Camry. They're stretching up to that 3 and that Y, whereas now they'll have an option to participate at a price point they would have traditionally with a Toyota or a Honda.
it brings in a lot of people who couldn't have bought a Tesla in the first place. But I think it also takes from people who were stretching to buy a Model 3.
Yeah,
And frankly, the next generation vehicle might just be a more compelling vehicle because of manufacturing methods and efficiency and technology.
yeah,
It's got a 1,000-volt architecture. It's going to have 48-volt, low voltage architecture. There's a lot of advances that will probably make it a better vehicle overall, even though it'll be a little bit smaller. So the path that I see for Tesla is, number one, this next generation vehicle comes out, and maybe they make 6 to 8 million of those a year. I don't know if they reach 10 million, but 6 to 8 million a year. And then
mhm,
2 to 3 years, after, as they're approaching full ramp for the next generation vehicle, then there's a total redesign of 3 and Y. And there's also a total redesign of S and X. And
yeah,
you have to do a total redesign of those vehicles so that you can, I think the next generation vehicle starts around 20 grand, maybe even less than 20 grand. So buying a Model 3 for 40 grand isn't going to make sense. And I don't think their manufacturing methods for 3 or Y can get those vehicle prices much below 40 grand. I think they sell a Model 3 in China for 35 grand or something like that. But to get those vehicles down to 30 grand, is going to require a total re-engineering, not just a refresh. And then if you look at S and X, like I'm less worried about Model S because I think the market for large sedans is just fundamentally small. But if you look at Model X, if you said, you know, we're going to do a total redesign of X and we're going to make it like a larger version of Model Y, right? With a genuine third row and maybe an inch or two wider, but not as big as Model X, and you know, a slightly smaller battery pack than Model X, and taking advantage of the 1,000-volt architecture and the 48-volt and everything else. That vehicle, so Model S and X together sell about 80,000 units a year, and more than half of those are X's. It's probably like 2/3 X's and 1/3 S's. So if you can see a Model X coming in at $79,000, right, instead of $100,000, and then getting a $7,500 tax credit, I think you 5x the sales volume of Model X. So I think that's the path forward. So you sell 250,000 Model X's a year. That's a much better path. So I see the path as being, first of all, you have this next generation vehicle selling.
I think that's super compelling. Like that would be really compelling for people.
Yeah.
Like the
I mean,
Model X, it's such a baller vehicle. Like it's for billionaires. Like the doors open for you. You can open the doors with a button press on the screen or with your key fob, any door you want.
or your phone.
Yeah, it's just it's so cool. I think the next gen, my guess is like 27K might be where they start, but then you're probably right, they get down to 20. I think
it's gonna be low. It's gonna be 20K. Everyone's talking 25K,
yeah.
it's 20K. But I just want to go further.
Let me say something about the why. So I think like 2026, 2027, they apply the unbox method to it.
Exactly.
And they don't do it all at once. They do one factory at a time, something like that. So it's not super disruptive. You throw a bunch of optimists in there to help out, all that good stuff. Then you can drop the price of it. And you know, Toyota's thinking they're going to suddenly, you know, make a Model Y in 2027 and do it the way they've always done it, and just kind of copy where Tesla is today, and that's just not going to work for them.
Yeah, but I wanted to hit at one thing, which is I don't get to 20 million on the next generation vehicle and the other vehicles we know about. Even the van, there's, you know, rumors of a van, which I think is pretty likely there's going to be a full-size van, and maybe there'll even be a smaller van based on the next gen platform. I think there's another smaller vehicle coming 2 or 3 years after the next gen vehicle. So by 20,
is it the one behind your shoulder there?
No. This is my crazy pod car startup we'll talk about later. I think that the next vehicle beyond the current vehicle, the next generation vehicle we know about, because if the next generation vehicle is going to be in the ballpark of the size of a Corolla or a RAV4, there's a large swath of the world, like India in particular, China, Japan. There's a large swath of vehicles that are significantly smaller than a Corolla. So in Japan, there's a class of cars called K cars that are maximum of 660 cc's. So, you know, far less than a 1-liter engine, right? And these are very small, typically boxy cars. There's these dimensional requirements, so they make them a box to fit. It's like the footprint is box, so they fill the entire cube over the box. I think one of them is actually called I think it's the Nissan Cube is actually the name of one of them. So if you picture that there's a world of people who can't afford $20,000 for a car, and 10,000 is I think more than the average selling price of a car in India. So I think there has to be another smaller vehicle that's coming after the next gen vehicle, and that's not in the Investor Day, you know, Master Plan Part 3 white paper. There's no hint of that in anything that Tesla has said. But if you're going to get to 20 million vehicles, I think they have to do that. And it would also be more efficient and contribute to the accelerating the transition to sustainable energy. So I pictured 20 million vehicles, including a significantly smaller vehicle that comes around 20. You know, if the next gen vehicle is going to start significant deliveries in 2025, then this other vehicle is going to be like 2028, and it'll ramp fast. And by 2030, that's how you get to 20 million. But I wanted to get back to this. So when you come up with your 4x for 2030, and you're leaving out BOT and FSD, is that at 20 million vehicles production and Tesla Energy growing rapidly, or how do you get there? How can you only get to 4x with Tesla Energy growing 50x?
So again, we're worried about lithium, the amount of lithium they're going to have. So it's like 12 million vehicles, and I forget where the top was on Megapack, but essentially what we're modeling in is, pretty good margins on auto. I think is like at least 20%. Much better margins on Megapack. We don't think there's we don't think they're going to be like 20% anytime soon. They're just so valuable and compelling. But then, big margins on FSD just as a useful driver assist. So just on those three things, we got $1,000 a share, based off of the levels and the profitability and like the multiple we look at.
Okay, so I want to address the margin issue with Megapack. We talked about this before we went live, before we started recording. And you know that I've got this interest in how they're accounting for Tesla Energy and how they all of a sudden deferred energy deferred revenue increased, and unsatisfied performance obligations, the money that they get paid on contracts relating to performance, that number massively jumped in the last 10Q.
And that's just the uptime of the Megapack,
Right,
how well it's performing. Yeah.
But my question is, that money that's going to be recognized later, whether it's deferred revenue or payments that are coming later, I don't know the answer to this question. That when they accounted for costs of goods sold in the margins that we saw, are they deferring costs of goods sold as well to accompany deferred revenue and payment obligations that are coming later? Or are they booking all the costs now, and the revenue that comes later comes with like basically 100% margin? I'm guessing that they're actually also deferring cost of goods sold.
Yes, that would be my prediction for what they're doing. I think the main drag for margins right now is actually runoff from Gigafactory Nevada Megapack 2, in that the comparative growth of Megapack 2 XL, which is coming out of Lathrop, which I hope to visit this quarter. So that growth is what had fueled the growth in the margins, even though the revenue came down in the energy side, the margins went up by 110 or 130 million.
Right.
And that's actually really close to our number internally.
Well, I was wondering about that because they did have a jump in recognition of deferred revenue. So, this is something I don't know the answer to yet. I need to go through the 10Q and see if they're deferring costs. Because if they're not deferring costs, then that future revenue that comes in later will be basically 100% margin. So I don't think they're going to do it that way, but it's possible they are doing it that way, and I wonder about that.
No, they would. I'd say in general, you need to match the timing of costs and revenues and profits.
Okay, I'm not sure how that's going to play out, and I think that could be really significant.
Yeah, I'm not a world-class CPA or anything, or CFO or controller or anything like that.
Okay, so I wanted to talk about my Japan plan and how that relates to Rebellionaire. Do you want to go there, or is there something else you want to talk about first?
Well, I want to talk a little bit about Rebellionaire for a second.
Yes, go.
And I'm ambushing Warren. So yeah, I brought on Matt Smith. He's a really good analyst. He's really good at modeling companies. And we've been going really deep on Tesla stock options. And I know on your channel, you just as an experiment, you went long some calls with a little bit of money. What we found that was surprising was, there's this perception that because Tesla's had these periods where the stock is just teleported higher, that weekly cover calls would be bad. But what really surprised us, and I'll reveal this publicly for the first time, is that there's a sweet spot for them that actually did not lose money in 2020, which is like really surprising.
Okay.
You think about 2020, I think the stock was up 600 or 700%.
Yeah.
You would think that it had to lose money that year.
Oh, wait, it's not about whether it lost money. Did it perform as well as if you had put the same money into Tesla stock?
So you separate the two. So the addition of the covered call, did it add or subtract from it? Because
From what
during
you
a
would have
week
paid to
when
just
it
sell
doesn't
Tesla
work,
stock. Yeah.
what
From
during a
what-
week it doesn't work, you actually lose shares or you lose cash.
Yeah.
That's a real surprising thing to me.
So, but did it perform better than, did that strategy perform better than just holding Tesla stock? Is my question.
Yeah, at the sweet spot it did.
Okay.
But that, there's
Okay.
no
So then the other
guarantee
question
that
is,
protects you, because this year in January, from the open on Monday to the close on Friday, the stock went up something like 27%.
okay.
And that was the earnings week. Go ahead, Warren.
So is it that afterwards you were able to identify where the sweet spot was, or do you now think you're able to identify where the sweet spot is ahead of time, and are you confident that the sweet spot will stay in the same place? Or is it possible you were just lucky in how you identified the sweet spot last time? And this is the thing about playing games with options and any kind of timing, anything like this, is like what looks like a sensible strategy and what the numbers support today, the game might change tomorrow.
Yeah. Yeah. So what we found in 2020, this wasn't a tactic we were employing then. So it is a back test, and that there's a lot of risk with back testing because the future is not the past,
Yeah.
and past performance is no guarantee of future results. But it's just a capability of being able to do this. So we were able to get the information that we needed to do the research, and I actually used Chat GPT to help me be able to look at the numbers, because the amount of information we needed to look at this was like astounding. Like you couldn't even fit it into an Excel spreadsheet.
Right.
And Excel has a 1 million row limit.
Yeah.
So it's pretty mind-boggling.
Can I just
The
disclose
other
my
thing that's a little more controversial, and go ahead and add your point.
Go ahead.
Oh, so a little more controversial that we try and do over time is looking to trim Tesla stock when it does one of these, and the Uber bulls are all going all crazy and celebrating and high-fiving, and I'm celebrating with them, but I'm a little more cautious. I think there's an opportunity to take advantage of the emotional highs and lows of Tesla stock. So like, you know, a lot of people dollar cost average, but to be able to add more when it hits some kind of panic low, like we hit toward the end of last year, you don't have that ability, that dry powder or ammunition to do that unless you're trimming when it does one of these. But it's certainly risky. But what I'm talking about, I would term as, active investing or long-term investing. Whereas what you and many people are doing is taking a coffee can approach, where you just kind of put your shares in a coffee can. Sometimes you add some and you just leave it buried in the ground.
Yes. Yes. No, and my strategy is generally, I don't do dollar cost averaging because I don't have a steady flow of income. If you have a steady flow of income and you're like, listen, I'm going to take $100 a week from my paycheck or $500 a week from my paycheck and put it in the stock market, that's dollar cost averaging.
Right.
My money comes in fits and starts, and my
Mhm.
cash flow is not consistent. So for me, it's like when all of a sudden I have an extra pile of cash, then I buy Tesla stock, and I don't like say, all right, I'll do it $500 a week over the next 10 weeks. If I got $5,000, I'm going to put $5,000 in now. And I just spent, was it $56,000 buying? I bought 200 shares at 280, so it was $56,000. I just did it in one lump. I didn't try to time it. I didn't. And when you think the stock's going to 10,000, whether you buy at 280 or 260 or 290 really doesn't matter a whole lot. I think
Yeah.
people get caught up in trying to catch the dip. And the thing that you don't want to miss when you just talked about trying to like have some dry powder so you can buy when there's a dip is there's the danger that it's going to go up higher, and the dip is going to be not as low as you thought it was going to be,
Yeah,
and
that's
you
the
missed out
risk.
on the
Yeah,
rise.
yeah, that's
So
the risk.
because it's clearly going to dip. It's going to be a bumpy ride. That's, I think, the thing that most long-term bulls agree on is it's going to be a bumpy ride. And for some of us, our attitude is, because my cash flow, part of the Japan thing and what's going on in my life, my cash flow situation gets a lot better it's already gotten better, but it gets a lot better in a couple months. As my cash flow situation improves, I'm going to have more cash available. I'm actually better off if the stock price goes down,
Hmm.
right? Because I have free cash right now because I'm planning for certain events. But if the stock were to dip to like 100, well, then I would buy a ton of stock if the stock dipped to 100, which is
Yeah,
like horrifying to most bulls. They'd be like really upset if the stock fell to 100. I'm like, unless something changes in the fundamentals of the company, I don't care what the daily stock price is.
yeah,
I'm not saying I don't, I get it. I think you and I both, we get an emotional high when the stock is up,
yeah.
but from an
It's
intellectual
just
standpoint,
it's a human thing. Yeah,
but from an intellectual standpoint, like if the stock falls to 100 from, now it's trading, I don't know, 260, something like that. If it falls to 100, lots of people are going to freak out, and I'm going to be like, time to buy. Like, because I don't see a change in the path to $10,000 a share.
hmm,
That it will get there. It's just, it's going to be a bumpy ride, and you've got to be ready for the bumpy ride.
yeah.
Um, so like and the other challenge for me, I don't know what your take is on this. I have a lot of Tesla stock now, and the choice, do I buy 200 shares? Do I buy 300 shares? Like, it's not really moving the needle anymore to buy a little, that like to me, all of a sudden, for a lot of people, it's like, oh my God, but like, it's gotten to the point where that's just not that much of a needle mover. And if I see Tesla stock going to even $1,000 a share, just my lifestyle, I don't buy yachts, I don't fly private
Yeah.
jets. My lifestyle is pretty cheap. I mean, yes, I own a Plaid Model X. I'm about to sell that, but other than the Plaid Model X, my lifestyle is really, I cook at home, I go out and I
Mhm.
drink bottled water rather than, mix that, rather than cocktails. I'm just like, I'm a cheap date. Um,
And I think it's like maybe that's an always thing for you, but I
yeah,
think right now it's a critical thing. Like I think our $1,000 a share in 2030 is likely to be on the low side.
right.
Um,
But
and
I'm just saying if it 4X's, if it gets to $1,000 a share,
yeah,
my net worth is so high, like it doesn't matter that you get to this, it almost doesn't matter now, right? If my net worth is where it is now, like I'm pretty much, there's,
well,
some
I think
pension
it
funds.
matters, and here's why. It's like
Yep.
there's only so much you're going to spend on a pod car, and that you'll spend in Japan. We'll get to that very soon.
Yeah,
There's only so much you're going to spend on yourself, and I look at it as money that you could use to impact the world. And
true.
eventually, Tesla may slow down in its growth. Maybe just down the road. When Steve Jobs died, Apple's only grown like 11% a year for a long time. After that,
Yeah.
and the stock's just done better because of the buyback and some other reasons. Um, so I think it's just a critical time. Like AI is driving so many things now. Even if you're not all in on Tesla and you own some other tech stocks, I think it's an important time to, on the spending side, to focus more on what you need rather than what you want.
Right. Yeah, the AI thing, it's hard to figure out where to place your bets on the AI, on what's happening with the AI, because I do see the developments in machine learning, neural nets, et cetera. I do see that becoming a game changer for society in a lot of ways. And some companies are going to become trillion-dollar market cap companies that, if they aren't
Yeah,
already, they're going to, you're going to see trillions of dollars in market cap change as a result of these AI developments. And it's really hard to figure out where to put your money, right? Because OpenAI seems to be in the lead in large language models right now. I don't know how long they're going to hold that lead. I don't know if some other algorithmic approach is going to come along. I think it's very clear to me, and I think clear to you, that Tesla is leading the world by far in what we would call real world AI,
yeah,
in the ability to recognize things in the real world and manipulate objects in the real world and navigate the real world. And that's going to be a really important area of AI. And it's just hard, like when it comes to something like large language models or diffusion models for like generative art. it's hard to see which player to bet on. Where with
Yeah.
Tesla, with real world AI, it's really easy to see where the bet goes. So
Yeah. For us, we're looking for companies that are looking to harness it and open to it. We see a lot of large companies where they're banning employees from using it at work,
really,
things like that. Yeah.
that,
And
that's
I
pretty
think they're
odd.
worried about employees using confidential information, but like you can use it and just like take out the name of the person or take out the account number or things like that. Um, so I think some companies are going to handcuff themselves, but one of our big holdings is NVIDIA, and like everyone's all roads right now lead to NVIDIA. But
Yeah,
Dojo, Tesla's working on Dojo. They're going to have to scale from zero, and but AMD is becoming more competitive now. So um, there's some risk to hitching too much of your wagon to NVIDIA, but it's just such a productivity savings. We feel that's going to drive bull market for a long period of time. But like eventually, I think that the prices for services and creative work and some other things are going to come down because it's just that productivity boost is just going to increase supply of everything.
yeah. I was having a conversation yesterday about this. I'm writing a novel, and I've got 2 more novels and a nonfiction book I'm going to write, and I've been using Chat GPT as sort of like a writing assistant
Hmm.
in a variety of ways, as an editor, helping me write dialogue, helping me write certain bits. And I've now occurred to me, and this is the conversation, like, well, why don't I feed my chapters to a different large language model like Llama or Bard and get different opinions on, have multiple writing partners, and one of them edits the other one, and like where does that lead? I think there's so many, and I think the concern about like company secrets or whatever, you can, I think companies can get their own open source large language model, bring it in house, and then the data that they input doesn't go outside.
Yeah, you can fine tune the model, things like that. Yeah, and
Well, I mean,
that's
you can.
that's
What I'm
a
saying is, you
service
can.
that NVIDIA and others offer. Yeah,
Yeah, you can bring that in house, and then you can take advantage of the tech that's out there without your input feeding back into the original model builder. I
yeah.
think I think there's options like that, and yeah, I definitely think it's like a company that doesn't see how you can use this to grow your business and I would say enhance the productivity of your employees is a company that's really missing the future. And
Let's
companies,
talk about the land of the rising sun now, Warren.
sure,
Japan.
yeah. So the backstory here, that a big chunk of the Japan thing is just on a personal level. I hit this transition in life a couple of years ago. My joke is that I'm in my midlife crisis, and if I keep it going, I won't get old. That's one of the jokes. I got a few jokes to go along with this. So part of the midlife crisis is I decided I want to have kids again. I have 2 kids who are now young adults, and
Mhm.
college and college graduate, and college, entering college and college graduate, and they don't really need my time anymore, and they
Right.
don't really need a lot of my money, at least for now. So I just have all this freedom, and I really enjoyed being a dad, and I still enjoy being a dad, and I'm very proud of how they came out. So I want to do that again. And the shorts, the
Can
one
I
of the,
say something on that?
yes,
Is I'll say like it's if you're not a parent, um, it can be 100 times better than you ever imagine,
yeah.
and it can be 10 times worse. And
Well,
the better is like way higher than the worse.
there are bad moments in being a parent. I've been very lucky as a father that we have not had a lot of bad moments, and we've had a lot of great moments.
Yeah,
But it totally
it's
changes your outlook.
challenging.
But it totally changes your outlook on the meaning of life.
Yeah.
Your total view of life completely changes when you have children, and for me, for the better.
Mhm.
Your obsession with yourself, all of a sudden you're no longer the most important person in the world. You're important, you can't forget your own importance, but the future is really your children's future rather than your own future at some point, because
Yeah.
we're probably not going to live forever, and they're going to carry on our legacy, that type of thing. But so anyway, I would just say simply, I have not done well in the dating world in America, and I gave it a
Mhm.
couple of years. And I lived in Japan 30 years ago. I speak Japanese. I have reasons to think I might do better in Japan than I'm doing here. So that's one primary motivator. as part of exploring that, I took my kids to Japan in May and June for graduation present. And we went, and I told them one of my ulterior motives was I'm thinking about moving to Japan. And so
Right.
on one hand, I'm giving them a trip to Japan, and on the other hand, I'm like exploring to see whether I want to go forward with this. And it was very positive experience. And so now I'm moving in less than a month. I'm going to be living in Nagoya, Japan. And part of that is this pod car thing. And part of it is, of course, chasing women. By the way, if you want to chase women, it helps if they have shorter legs. So that's one of the other jokes. But what I discovered, and I think this can be relevant to rebellionaires, is the cost of living for me in Japan will be dramatically lower than the cost of living where I live in Florida now. And my cost of living in Florida is not, by Florida standards, my cost of living is not high, but my rent will be less. I'm not going to bother owning a car, and I was spending basically $2,000 a month on my Plaid, right? And if I had another car, I'd be spending $1,000 a month, but I'm not going to be spending that money. And I just paid. I'm still shaking. I'm still shaken.
You can do high-speed trains in Japan, right?
Yeah, I mean,
is there one linking to that city that you're going to be in?
No, Nagoya is one of the major cities in Japan. It's the fourth largest city in Japan. It's between Osaka and Kyoto on one side and Tokyo on the other side. It's 90 minutes from Tokyo and an hour from Kyoto or something like that. It's a great location. And you have 90-minute bullet train ride from one and an hour bullet train ride from the other. Bullet train's not necessarily that cheap, by the way, but that's a whole nother conversation. But anyway, just my cost of living. I went to McDonald's 2 days ago. I just had a craving for McDonald's. Don't ask me why. It's not normal. I go to McDonald's less than once a month, but I had a craving. I went to McDonald's drive-through. I got a quarter pounder with cheese and bacon, fries and a Coke, and it was almost $12. And I was rattled because we were out in Tokyo in June.
That's a $5 value meal, Warren.
Exactly. Well, we were out in Tokyo in June. We went to a noodle soup place, a soba and udon noodle soup place, and I got a bowl of noodle soup for like $4, and it was a better bowl of noodle soup than any bowl of noodle soup you will get in Florida, right? For $4. Like, you can eat out in Japan for under $10. I was in the Haneda airport sushi in Haneda Airport in Tokyo. I paid $10 for airport sushi, and it was better than any sushi I've had in Florida in 12 years in Florida, right? And it was like, in America, the prices in airports are extortionary. The prices at resorts, at tourist traps are extortionary. In Japan, they don't raise the prices when you go to a place like that. It's the same prices as somewhere else. So, but the point about being a rebellionaire is moving to Japan allows me to lower my cost of living. And there's an adventurous side of this too. I'm actually living an adventure. You know, don't that's part of it. But from a financial side, I'm going to be spending a lot less money, which frees up my capital to invest in Tesla or invest in the pod car. And that's the other side of this. I have this startup where I'm going to make a single passenger. I believe I'm going to build a single passenger electric vehicle that's optimized for a Robotaxi world. So the cost of building it will be far less than the cost of building the least expensive Tesla. But, by 1/10 the cost of building the least expensive vehicle Tesla might ever make, right? And because it's optimized for one person, it's narrower, it's shorter, there's less material, it weighs like less than 500 pounds versus 3,500 pounds or more for a Model 3. So materials cost is less, the motor cost is less. You just put all these things together, and then the electricity consumption is a lot less because it's a lot more aerodynamic, both in terms of frontal surface area, coefficient of drag, a whole bunch of ideas like that. But in order to get this going, I need to find, I'm not an engineer, I'm a retired lawyer. I need to find engineers to help me build this. And I did hire an engineer, and I got a pretty good engineering design through the Upwork platform. But I wasn't able to find somebody to build it. And I made a pretty substantial effort to find somebody to build a prototype, and hadn't succeeded. I hired another guy on Upwork to modify a go-kart to make some of the steps towards what I wanted to do, and he never finished the job. And on that one, at least I got most of my money back. And I think in Japan, so this is an example of why Japan would be better. Number one, if you want to hire a full-time engineer out of a Japanese university, they make about $30,000 a year coming out of college and big companies in Japan.
Wow.
In America, they make like 80, 100 grand. A senior engineer, in a Japanese company might make 60 or 80 grand. In America, they might make 200, 250, right? Depending on what field of engineering, what kind of work that they're doing.
Mm.
So in the short run, I'm going to hire Japanese engineering students who there's teams at Japanese universities that build vehicles for a Japan Society of Automotive Engineers sponsored competition. And that's the thing I'm going to when I first get to Japan in August. The competition is actually the end of August. And about a third of them, a quarter to a third of them now are EV teams. So the vision is I'm going to go to universities that have electric vehicle teams and see if I can hire students part-time and then during their breaks full-time to get prototypes built. Get through a few prototypes and then see where we are. And if Tesla stock has, 2 or 3x by the time we have some decent prototypes, then I just throw more money in and hire a full-time engineer. If the stock is, doing okay, but not that much, then maybe I do a funding round. And if I can raise $1 million, let's say, which I think I can raise more than $1 million. I think I might be able to raise $2 to $5 million. But if I can just raise $1 million, that $1 million goes a lot farther in Japan than it goes in the US. Because I've hired 2 full-time engineers. Let's say I'm paying them $50,000 a year versus in America, I'm paying them $300,000 a year, or two to $300,000 a year. So the ability to turn, once we get to manufacturing, the game might change. But just getting to the point where we have a near production prototype that we can then take to Tesla and whatever other self-driving companies out there and say, hey, we want to try out your self-driving hardware and software on our vehicle. You need to get a vehicle that's got the efficiency that I want, that's got the, the prospect of manufacturing at low cost. And I feel like all these things are more attainable in a country that has a lower cost of living and lower cost of labor. Now, I think for a lot of rebellionaire types, they might be looking at Costa Rica, a Latin American country, the Philippines, Thailand.
Yeah.
I'm not saying that's a bad plan. Just for me, a lot of those choices, you're basically moving to a country that's poor, right?
Yeah.
You're moving to a country that doesn't have the infrastructure, doesn't have the lifestyle that a wealthy country has. The contrast for me is, and you could go to Philippines and a lot of people speak English really well.
Yeah.
There's certain countries you can go to where English is pretty common. Or you speak Spanish well. There's a large swath of the world is Spanish speaking, and you have lower cost of living in those places. For me, because I speak Japanese, Japan's an option to me. But Japan is basically a wealthy country. It doesn't feel as wealthy because their incomes are lower, but their cost of living is also lower. So,
I think what you're doing well, Warren, is like this is a bold move. It's unconventional.
Yeah.
That's kind of what we're about. But like you were curious.
Yeah.
And you actually found a place in Japan that you'd love to live that would actually cost less and you'd be perfectly happy to live there. And like there's all these other bonuses, like you might have assumed that engineers in Japan were the same rate or maybe even higher than the US because and you might have assumed that food costs more or whatever. So it's like being curious, open-minded, and doing your due diligence. Like those are all key aspects of what you're doing here.
Yeah.
And I think it's a wonderful idea, and I'm super excited for you. A little more context about Warren. You've known Japanese for a long time, so you've been like
I had a
interested.
Japanese girlfriend when I was in grad school back in the late 1980s, early 1990s. And then that didn't work out. But after law school, I went to Japan and I taught English in Japan for a year. And a lot of Americans go to Japan and they learn how to order a beer or talk to a pretty girl. And I was reading Nihon Keizai Shimbun, which is the equivalent of the Wall Street Journal, trying to understand Japanese business language, Japanese language for business, Japanese language for politics. That was my interest. And so I really put an effort into learning Japanese to the point where 30 years later, I went to Japan and I was able to travel around the country and have fairly intense conversations with people. And I've lost a lot, but I was still able to have fairly intelligent conversations with people. And I'm sure a lot more is going to come back living there. But I did want to mention, I didn't choose Nagoya. The cost of living thing is pretty much everywhere outside of Tokyo.
Oh, wow, okay.
Tokyo has very high rents. Pretty much everywhere outside of Tokyo, the rents are low. I was originally planning on a city called Fukuoka, which is Western Japan, close. It's the port that's closest to South Korea. And it's a major city. And there's a lot of nice things about Fukuoka, but the reason I chose Nagoya and not Fukuoka is because Nagoya has 2 or 3 universities. Either Nagoya University is the top electric vehicle team in this competition.
Right.
And there's a university about an hour away called Toyohashi University of Technology. I want them to rename it Toyohashi Institute of Technology, but and science, of course. But there is a Tokyo Institute of Technology, by the way. But TIT. I'm making this a sex joke, an Elon joke. But Toyohashi University of Technology is like the #2 team. So, and there's 2 or 3 other EV teams near Nagoya. Nagoya, by the way, is basically the home of Toyota. So there's a lot of automotive engineering at the universities around Nagoya. Fukuoka doesn't have an EV team. So even though I like Fukuoka for a lot of reasons, they don't have an EV team. Nagoya has a lot of EV teams in or near it. So it's a lot more viable as a place to go to find the students or young engineers or whatever. And I think, by the way, I think there's a significant probability, if we're correct about Tesla growing, Toyota is going to start experiencing more hardships. And automotive, there may be less work for automotive engineers in the Nagoya area in the next 2 to 3 years. So by the time we get, it's a little bit thinking, by the time we get past the prototype stage and we're starting to say, okay, now we want to start thinking about how we can manufacture these in some volume, that might be a really good place to find workers and engineers because they're trained in building cars, right? We're still building a form of car. It's going to be a different kind of car, but there may be a real opportunity there. But so the primary reason was just there's universities here that are doing this electric vehicle thing, and I can probably get some people who have experience building small electric vehicles to work on my prototypes. And I don't know whether I'm going to be able to crack that nut, but I think there's potential there. And Nagoya is just a good location, being near Tokyo, being near Osaka and Kyoto. And honestly, for me, like anywhere in Japan is really fun. It's just it's a nice place to live.
Yep.
Yeah.
Well, real quick, I'll just be quick about this. I do want to maybe talk about Twitter, but Warren's working on looking at deferred revenues and payment plans on Megapack. He's delving in that. He's beginning to tweet about that. One of the things I like to thank Martin Vieca and Zach Kirkhorn for is just more disclosure about the energy side of the business. I think they began to add this after Q1. So just having that more disclosure, we can look into it. So I'm curious what you find there, Warren, over time. Let's talk briefly about Twitter and monetizing Twitter. I know people are all like going all crazy to get like the 15 million views on their tweets, but I'm not sure if that's like translates to $15 or like $150. So it's like people may be driving themselves nuts just to like cross some kind of threshold. But maybe you could share a little perspective on Twitter versus YouTube. And
sure. And I don't know if we're still calling it Twitter. We're shifting to calling it X.
X.
Yeah. So, so the first thing I wanted to say is I make money on YouTube from my YouTube videos, and I tweet on Twitter, hey, check out my new video on YouTube. And I found over time that the tweets that I do on Twitter do not drive significant number of views on YouTube. My YouTube views come from YouTube. That people are on YouTube and they're looking around and a video shows up and they click on that video and they watch it. Probably less than 1% of my views on YouTube come from Twitter. So one of the things, as someone who's going to monetize Twitter, and I did just get notification, I was already monetized for subscribers and I have, I think, 28 subscribers. So I'm making over $100 a month just from about close to $150 a month from subscribers. So I got the notification that now I'm eligible for ad revenue sharing. I think that for me, it's going to be $100 to $200 a month. I'm fairly close to the threshold. I'm above that 15 million threshold. I was surprised I didn't get it initially, but I'm clearly above it. Above 15 million over 3 months or whatever. I had more than 5 million every month the last 6 months. So I was a little surprised I didn't get it initially, and apparently there's some glitch, whatever. I'm gonna start getting it, but I don't expect, based on what I saw other people saying, this is how many views I had and this is how much revenue I had. I think Farzad said he got like $1,300, right? And I think he had 3 times as many views as I had in that period.
Okay.
So maybe I'll get $400 for a 6-month period. And if it grows, right? If it grows, then, if I'm able to grow the viewership and, bring more of my YouTube content over, then maybe I'll get more than that. But I make more than $1,000 a month from YouTube ad revenue. And I make, I have other platforms that spin off the YouTube platform that I make money from, like the t-shirts. I don't make much money on the t-shirts, but maybe 100 a month. elonbits.com, by the way. And when you, the one important thing I would say is, it seems like I can post my videos on Twitter and it doesn't reduce my YouTube revenue, because my YouTube views are not coming from Twitter.
Yeah.
Then people seeing my videos on Twitter is not going to stop people on YouTube from watching my videos on YouTube. The other thing that I think is a negative for me, and I don't know how this is going to apply to other content creators, is I built up an audience of something like 60,000 followers, or whatever we're calling them, on X, Twitter X. They're not used to watching long form video content on my on my account. They're used to reading 140 character tweets, or pictures, short videos maybe. So with YouTube, my audience is used to watching 10-minute, 30-minute videos, hour plus long live streams. I don't think X Twitter even offers live streams yet. So if they do, I haven't figured it out yet. And it's harder to make a live. I don't think they've enabled all that yet. So is my Twitter audience going to be interested in my long form video content? Will I pick up an audience that is interested in long form video content as I pursue this on X? Will X create a video option on the platform so that you can go from reading tweets, reading posts, whatever, short form posts, to let's see what videos there are today that I might want to watch, more like the YouTube home screen? I think there's a lot of potential for X to innovate on how they present content to users. And if they, just as an example, if they created a screen that's like the YouTube home screen, if you could subscribe to particular video creators, or specifically have who do I follow that makes videos, I think how they make that work so that it draws more people into watching long form video on Twitter, because you don't make a lot of money on short form content on YouTube. The money is in long form content. If the video is less than 8 minutes, the revenue is a lot lower. If people watch your longer videos, if you post a longer video on YouTube and people only watch 3 minutes of it, it doesn't matter. But if you're like my live streams, typically the average watch time is 20 minutes. So you're getting a few more ads in there. You're generating a little bit more revenue. Will X Twitter be able to create a platform like that, or turn video into a platform like that it actually gets users to watch long form video, and that generates more ad revenue? That's interesting. Spaces, are Spaces going to become a big ad revenue generator? I don't even know where to start with whether Spaces becomes, because I think Spaces is one of the best features on Twitter. And I think that will eventually become a replacement for what we're doing right now. It doesn't seem like rocket science for them to decide we're going to put video on Spaces. And the speakers are now videos instead of icons. And what does
or there can be like a Twitch model. I know it's not innovative, but like you can have commercial breaks and things like that.
Yeah, I've never been on Twitch. I know it exists. I never watched it. So yeah, I think there's now commercial breaks on my YouTube live streams. But I think there's a lot of potential for X to monetize in a lot of ways. I think that it would make sense for them to create a shopping platform on X, and then if your post, tweet, video, whatever promotes a product that's on the platform, like maybe I can sell my merch, built into X, and then if I link somebody to your merch, maybe I get a 5% commission, right? Or maybe I get like 5% extra if I refer people to my own. Like, how do they I think there's a lot of ways that X could be monetized that make creators a lot more successful. Like I don't really make a lot of money on merch. I love my merch. I wear these shirts all the time, all the different shirts that I have. I think I just created a couple hats. I think it's fun, but it's just not a big revenue generator. It may be that the revenue share on X for merch would be better, or the Amazon affiliate, referral links. All of a sudden there's referral links on X for referring people to shops on X. That may be a big revenue generator for a lot of people. So I think there's a lot of potential there for Twitter to monetize itself and
Right.
allow creators to monetize, content creators to monetize in a way that really makes it an attractive platform. And just personally, I find the X Twitter platform very engaging. I spend a lot of my time on X and on YouTube.
Yeah.
And I feel like I'm starting to get more bored of YouTube and more interested in X. And I can't put my finger on exactly
Yeah.
why. I think YouTube's algorithm has gotten worse at suggesting content for me to watch.
Hmm.
It's too repetitive. It's not like, hey, you like this other stuff, let's try something completely different that might fit you. Whatever they're doing to recommend content to me is not really working well. Like I feel like I'm in a rut watching the same NBA videos, the same Japan videos, the same physical fitness videos. It's like, all right, I want to find something else. I don't know how to restart this to get to a different set of topics. And I think X might come up with a better out. I think even Elon was even asked about
Well,
that.
Warren, you can ask Chat GPT how to do that.
I suppose I should.
It could help you brainstorm.
Yeah.
I do want to say something on this, is that I just hope that people don't um make their tweets like just kind of go way out just to like try and hit this 15 million view limit, and or just like go crazy with their tweets just to try and get more from monetization. I really hope that people with their tweets try and tweet things that are valuable and interesting and compelling. And what I don't want to see is like when someone has a tweet and the tweet's, you know, great by itself, doesn't really need more context, that people quote tweet it and say, wow. And then like you're trying to get all the attention that that person kind of deserves into your tweet, and you're not adding any value.
No. You got to
Um,
screenshot it. You screenshot the tweet and then you share it. No, I think that Mr. Beast had a really good. If you've ever followed Mr. Beast, I saw him talking about this. It's like making one really good video a month is way better than making 10 not great videos a month. Like if
mhm.
you take the time that it took you to make 10 videos, and I don't follow that. Like I don't have the approach of, I'm not trying to make money on YouTube. I'm not trying to not make money on YouTube and Twitter, but I'm not chasing the money on either of these platforms. I engage with the platforms because I want to say what I want to say.
Yeah.
I make videos I want to make because that's what I'm thinking about at the moment. I tweet what I'm thinking about at the moment. And I have enough Tesla stock that the money I'm going to make on Twitter and YouTube is really just not that important compared to what's going to happen with Tesla stock. Like if the
Mhm.
Tesla stock price goes up 10%, I made more money than I'm going to make on YouTube and Twitter for a year.
Yeah.
So I just, and I
That's
think
great
just,
perspective for all the rebellionaires out there.
well, no, it's like for me, YouTube and Twitter are a way of enjoying the platforms rather than I make money, and I'm not apologizing for making money, but
Mhm.
I'm not like, Jordan Geesey, Limiting Factor, says he doesn't want to chase the algorithm. So he has a large amount of Patreon support. And
Mhm.
I don't even chase Patreon. I might mention at the end of my videos, hey, support me on YouTube, support me on, there's 4 different ways you can support me.
Yeah.
Like I mention it, but again, like I'm kind of like, I'm not into chasing the money. I'm like, this is what I want to talk about today. This is what's bugging me. So let's talk about this. This is what I'm
Mhm.
excited about. So let's talk about this. This is what's going on. I really enjoy the engagement on the Twitter platform. I'm not bored of Twitter yet. I think that
Yeah.
Twitter is really good at capturing the zeitgeist of the day. And I don't think YouTube is good at that. So I think that there's a real chance that Twitter is going to draw attention away from some other social media platforms. I almost never go on Facebook or Instagram now.
Yeah.
I'm on them very little because I find that the X platform is so much more engaging, and I think that that's going to get better over time.
Mhm.
And the other ones are getting worse.
Yeah. I don't know if it's true, but we monetize our channel because I worry that like if you don't monetize it, then they show your videos less.
Yeah.
So I felt this pressure to monetize. So we're not monetized for the money. It's more just so they don't throttle us for some reason.
Dave Lee talked about that in a video. He made a video making fun of how much money he makes on
Yeah.
YouTube, and he said, "Well, if I don't put any ads at all, then YouTube won't show my videos as much. So I put this particular like low intensity ad, I do mid rolls or whatever, and he does that, and he donates the money to charity or something like that.
Yeah.
Because
Yeah.
there's YouTubers who like brag about this is how much money. I'm not going to name
Yeah.
any in the Tesla community. There's one person in particular I'm thinking about who brags about how much money he makes on YouTube. And he has occasionally bragged about it. And I feel like Dave made that video in response to this one particular guy who made the video talking about how much money. And I love the guy who made the I love that
It's
particular guy.
good. It's also good transparency, even though it's a lot of bragging. Yeah. It's
Yeah.
good transparency. It's interesting.
Yeah.
Well, I want to wrap up here. I know this has been a bit long, but I enjoy you a lot, Warren, and I appreciate seeing your boldness, and we're gonna be cheerleading you. And I think it's very interesting what you're going to be doing in Japan, and there's a lot of things that may add on top of each other, right?
Wait, I
Just a
got to tell you
lot
one
of
more. I got to tell you one
yeah.
more. I'm talking to somebody about a friend of mine in Japan about making a video series, a new channel where we explain popular American songs to Japanese people. And the one that triggered this for me was there's this controversial song, "Try That in a Small Town" by Jason Aldean.
Mhm.
And like I know the Japanese people will have no idea what the controversy is. They're not going to understand what the song is about. And I could totally see explaining this is what the song's about. This is why this is catching controversy in America, whatever. And I could see like, once a month you do a video explaining one popular song, or maybe once a week. And
Mhm.
ideally you have a pretty Japanese girl doing the video with me, and everybody speculates whether we're dating or not. Of course we're not, but but like I think that could be a really good video series. So I could see doing, like, depending on how much time my time is and what I'm doing in Japan, I could totally see starting a channel like that.
Mhm.
Yeah. Sorry for
Warren,
rambling.
Warren, you gotta stay focused on the
No,
pod car. You
no,
gotta stay focused.
I'm not
The
good at focus.
entrepreneur, and I'm an entrepreneur. We want to go everywhere, chasing every shiny thing. And
Yeah. Like, so you're saying like Elon needs to focus on one thing, right?
not necessarily.
We can't all be Elon.
He might be the rule breaker, right?
He is clearly the rule breaker.
All right. Well, take care, Warren. It's been good to talk with everyone, and bye for now.
All right. Thanks, Bradford.